Good morning, guys, and welcome along to year one, week 34 of this FIRE journey, Financial Independence Retire Early. That's the goal, and this is we're well into the second year. As I say, we're just about into, not quite into December yet, but 30th of November, the year is coming to a close, and it'll be interesting to see what next year brings in relation to COVID restrictions and that sort of thing. There's been some talk in the media recently about some countries that would like to bring them back again, despite the fact that they were shown not to have had any measurable effect on the reduction of disease or indeed transmission. But there you go, this is what they do. All heading, of course, towards Klaus Schwab's Agenda 2030, which I'm going to suggest must be resisted at all costs. If you haven't started, sharpen your pitchforks, because things are going to get nasty in the not too distant. Right, this morning, guys, let's just have a little look at the status quo rather. The market is open. The price is probably slightly lower than it was this time last week, because as you can see here, we've got a 0.81 negative for this time last week, and I think it was Wednesday last week that it was Wednesday, but this is Thursday, so we're a week and a day. And for the day, we're up 0.4% to fifths, is that? And as you can see, the other figures there. So on the actual chart itself, you can see a very small red candlestick. But despite that, the price is pretty much maintaining. That little red candlestick there is of no consequence at all, and we are currently sitting at about plus 7.5% on our investment. I'm actually loath to call that growth, and the reason being that inflation has been so high that if anything, really, for the market to be maintaining its value, that figure would really need to be something more akin to, 10 or 11%. Isn't that what they say inflation was at? So 7.5%, although it's more money than we had, it's not keeping pace, I would suggest. And actually, in real terms, I think it would be misleading to actually call that growth. I mean, on the face of it, it's on the face of it, it's positive, but in real terms, I think it's actually more of a sign of the market flatlining at the current time, as opposed to any actual useful growth. So with that said, guys, let's go ahead and buy our weekly £120 worth of shares in the S&P 500. As you know, we are using the Vanguard exchange traded fund. This one traded in pounds. There are other versions of this traded in either dollars or perhaps euros. I would caution against making use of an exchange traded fund in a foreign currency for two reasons. One being that you'll probably find that you incur some kind of a foreign exchange transaction fee, and the other being that you're taking an extra added risk with using foreign currency, because the exchange rate one direction or the other cannot be guaranteed. So let's say, for instance, if your portfolio growth went positive 10%, but the exchange rate went against you, you could actually find yourself in negative territory pretty damn quickly, just depending on what the currency pair was. So yeah, just a little tip there, and I would actually say this to everyone. What I mean is, if you are if you're in the United States and you're investing in the S&P 500, well then do it in dollars, because that's the currency that you'll be using. Unless you've got plans to up sticks and move to a sunnier climate or something like that, and actually, even if you do that, I'm not even sure, to be quite frank, if you can then change your withdrawal currency with Trading 212. I don't know if you can. Yeah, just as a precaution, I'm going to suggest, on the whole, you're much better just trade in your own currency. That way you eliminate any foreign exchange risk. So here is our £120 being invested in the S&P 500 on the Trading 212 practice platform. So this is not real money, but it's going to buy roughly 1.75 theoretical shares. We are going to send that through and watch for executing up here. There we go. Order executed. We got 1.7508. And the figures have updated on the right hand side here. I can see now the portfolio value showing at 11,217. Return still 7.39. And the other figures pretty much unchanged there as things stand. Now let's have a little look at the notifications for this week. So that's the purchase we've just done. Some biggest stocks before earnings, the ones listed here: Royal Bank, Salesforce, TD Bank, Snowflake, Synopsys, Okta is that, and Kroger. Foot Locker up 18% on strong quarterly results and raised outlook. GameStop surges 19% on spike in optimism ahead of quarterly results. Okta down 6% as hackers steal data for all customer support users. Oh dear. Philips down at 6% as FDA warns on safety issues with CPAP devices. Okay, so CPAP, goodness, I was trying to think if I could remember, if I know what the abbreviation stands for. Basically what a CPAP device is a machine that forces air into your lungs, but it's not a ventilator. It's not an invasive kind of a thing. Basically you wear a tight fitting mask, and the device forces air into your lungs. It's typically used for people with sleep apnea. But I believe it was used in some cases where people had COVID and just needed that little extra bit of support to breathe. So because it forces air into your lungs, I think it's positive air pressure might be the PAP part of it. I'm not sure what the C stands for. But yeah, so I just not well. I don't want to say too much about these things, but I know of a couple of people with sleep apnea. I had quite a lengthy discussion actually with one of my colleagues not so long ago, who was provided with one of these devices. Now I don't know if his is a Philips or something else, but the machine that he had was really quite a advanced sort of a thing. I mean, it was able to sort of analyze and detect and modify and adjust and all these kinds of things automatically. So from that point of view, it did sound like it was a really useful device, and also because of the ability to kind of analyze and modify and whatnot, it's difficult to really see what safety issues there could be, because hypothetically, without wearing one of these things, if you need it, you're at much greater risk. So I'm curious to know what the FDA has said here. And are they just targeting Philips, or are there other manufacturers of these things as well? That's maybe something I'll look into separately. What else have we got? Biggest stocks before earnings again: CrowdStrike, Hewlett Packard, Farfetch, Foot Locker, and Splunk. High volatility Arginx, I haven't heard of that, but they went down 11% after pivotal trial misses expectations, so a bit of a disappointment for them. PDD Holdings up 18% on stellar quarterly results, fueled by Temu's client growth. Okay, so I'm assuming Temu belongs to PDD Holdings. To be honest, I have bought from Temu once, I think, and it was alright. The stuff arrived as expected and when advertised and all the rest. And I know of other people that wasn't the case, and they were given a credit towards a future order. And yeah, on the whole, Temu seems to be, in my limited experience, just as reliable, if not even more reliable, perhaps, than, say, the likes of Amazon. But the prices are significantly less. High volatility Rolls-Royce up 5% as the CEO pushes for efficiency and higher cash flow. Right. So that was the notifications. I just want to show you another view of what we've got here at the present time. So if I go to this little pie view, I wonder, can I actually make that much bigger on the screen? It would be good if I could, but okay, well that's not bad there. That's not bad. Really, this is the bit that I want to show you. And the important thing that I want to present here really is that within the Trading 212 platform, you'll see two lines on these graphs. Now, it's not particularly easy to make out perhaps, but the blue one, which is kind of slightly all over the show but generally up, that blue one is the value at the date and time shown above, and as you can see, that moves about as you move the mouse. Underneath that line, you will see we're just above the mouse at the current time here. There's a very faint grey dotted line, which you will see looks not dissimilar to steps. So it kind of goes up and then it goes along and then it goes up and then it goes along. And what that is the amount invested. Now you'll actually see this figure here is the amount invested. Okay. So if I set the time scale to the max instead of 3 months, at the start of this you cannot distinguish one line from the other, but once we get further up you can just about actually see the grey line above the blue line there, but only just, and then it's about here, which is around June this year, before you actually start to see the blue line separating away from the grey line underneath. It does come closer again in November, and then it separates away again as we get further through this month. That's a 1 year look at it there, and you can basically see the same thing. So if I put it back just to the 3 months just for a moment, basically what we are looking at here, these steps, as I called them, represent the investments that we're putting in each week. And if we weren't investing, then that line would remain flat. Okay, so if you can imagine the blue line kind of rotated slightly so that it followed the same kind of trend as what the steps are doing, then that gives you a truer representation of the change in the market. And I have to say, it's really not a lot. Now if we look in the last month, it's more there's more of an obvious kind of apparent growth, or a takeoff if you like, in the market, because as you can see at this point, the amount invested was it was similar to the portfolio value. I mean, at that point there, there was 1.76% difference in the two, but as time has gone on, then we have seen slightly bigger return on investment, and although there have been a couple of drops back here and there, on the whole it has kind of continued upwards, and that is kind of what you would expect to see over the mid to long term, is this divergence in the amount invested and the portfolio value over time. But as I say, it has taken probably a year to actually really see anything at all. And now that we're kind of well into the second year, we're starting to see it a bit better. Now the other thing that I'm noting there is the figures at the start are they're round figures for the investment, and then somewhere along the line the round figure changes so that it's no longer a kind of totally round figure. Okay, so it's between June and July this year. So I'm suspecting that the reason for that probably has to do with a dividend payment. I could imagine there may well have been a dividend payable at the end of June, and that is probably set to automatically reinvest, and that would have then given us the slight difference. I wonder, can I see that if I put things back to the usual size? As I say, it would be good to see. So I'm looking at June here. This is the 19th of June, and going up the way. We're into July there, and I didn't see any mention there of a dividend. It may not, I'm just thinking it may not actually show in the notifications. I might have to go into the history to see that. Let's give that a go. I think this is worth doing from the point of view that it just lets you see how the platform works and where you can see the detail of different bits and pieces. So we're looking to go back to June if possible. Oh. Okay, so this is actually May here. There is June. And I'm looking at these 120 amounts. So that's, oh, here, hold on. I see what has happened. 14th of June. I think something went wrong with the recording. I had bought, I sold, and then obviously did a new recording and bought again. And that's where the discrepancy has crept in, I think, because everything else looks to be amounts of 120. It is, yeah. So everything else is amounts of 120. This realized profit and loss, that'll actually come from that single sale, believe it or not. I'm just surprised there's no dividend showing anywhere. Where would I, hold on a second, where would I see the dividends? Because normally they do show up. Right, what does this do? Okay, that's just a date range to and from. That's our 50,000 theoretical pounds that we start off with, the initial sum. What is that little thing? Nothing. Okay. Right, what we can do is we can look at our pie and we can actually see. Oh, right, okay, we haven't created a pie with that, fair enough. Maybe it's up here then, account value, you would see dividends mentioned there, normally speaking. Except this doesn't show me the dividends, this shows me the portfolio value, the free funds, so the amount still remaining to invest, and I'm not sure why it's showing me, I'm not sure what BGN is, to be honest, or I don't have any Swiss francs, no interest in Swiss francs, other than a passing knowledge of what they are, but I'm not sure why it's showing me that. Right, that is interesting. Are we saying then that there's no dividend payable on the theoretical account? Guys, feel free to leave the stream if you want to. I'm just being nosy here as regards where on earth has the dividend gone, because I know that in real life, let's say, every so often you do get a dividend, and you do get them for the Vanguard, the exact ETF that I'm trading here. You do get a dividend. I'm not going to pretend that it's an awful lot at the current time, but on the kind of amount that we have invested there, I would have thought that we should have been expecting in around the 50 quid. But I ain't seeing it, so that's interesting, if not even a little curious. Okay, guys, I'm going to put that down to the fact that we are using a practice account, and I suspect that maybe that might be one of the limitations, that it just doesn't actually show what is basically something that only relates to actual trading, and either that or else I've got it entirely wrong. But anyway, that is it for the day, guys. If you are able to join me at some point next week, I'll come back and do a bit more, through another £120 into the Vanguard S&P 500 exchange traded fund, and we'll see how we go. If you are still watching, thank you. Have a great end to your Thursday, and I will see you next week.